Ready, welcome traders. It is Tuesday, February 27th, 2024. Another great day in the trading account today, and a good day in the markets overall. Everything pretty much green across the board, at least everything that I'm watching on my end. So let's just jump into it. And we started doing this yesterday, so I think I'm going to keep going with this and stick with the account trading first. So let's just jump into where the account is right now. Let me get myself off the screen. You guys can see the whole thing. Here's where we are on the day today. So we finished with a delta of minus 35. So negative 35 delta. It's actually minus 32 right now, but minus 35 delta, which is pretty delta neutral for us. Market was up slightly, so that would move our deltas a little bit lower. Theta overall is 1,023 as VIX continues to drop to all-time new lows, or recent lows at least. So volatility is pretty low. Theta is going to be pretty low, but we're sitting at 0.23%, which is actually not bad considering where the VIX is, down at 13 and change. And then net lick moved up again today. So we're up to 449.60. So another new all-time high in the account, which is fantastic. Love where we are. So we're delta neutral with slightly negative delta. We've got decent theta for where volatility is. We're hitting new all-time highs seemingly daily in here. Our BP usage on the day, 276,628, pretty much the same. If you subtract our bill amounts from that, we're sitting at 52.8%. So we're pretty close to 50% bill or 50% buying power in the account. We did not close any trades today, not really super active. Didn't really look at the account much at all today. Engaged in some really good discussions with members about some unique hedging and trade setups. So overall, busy that way, but not really just busy in the account. We had done most of our work yesterday, so really just sit back, relax. I don't see why you have the need to want to work that hard. I have 0 trades across 7 accounts today. Just a nice, relaxing day, and you don't have to be trading every single day in your account to make money. So we're at new all-time highs, and we really don't have to be that active. We traded yesterday. We're probably good today. If we take a little peek at the accounts with you guys if you want, and we'll go through some of that. But we just don't have to be that active. We've booked 19,935 for the month already. So I'd like to get, maybe in the next day or so, I'd like to get one more trade closed just to hit that 20,000 just for fun. But I'm not going to force anything to do that. But I think we've got a trade that's probably ready to close anyway. That should take us over 20,000 for the month. We're sitting at 4.8% in monthly return on the realized gains, and we're sitting at 25,375 in gains on our net lick. So net lick just continues to climb. We're up over 6% for the month. Overall, for the year, we're sitting at 10.5 and 11.5% respectively between realized and net lick increases, while the S&P is at 7.25 for the year. So we're doing pretty well, like where we are. We're in good shape. We've really got trades spread out. So we're really across the board strategy-wise, strangles being the big winners, with 112 trades, and then the long-term 112 picking up right after that. Then you've got a little bit of losses in hedges, which is to be expected. But overall, the core trades that we've got on, and for me, the core trades are the long-term 112, 60% of my available buying power, and not total buying power, but of my allocated buying power. Then you've got 112s on futures here. And then you've got some strangles, and then some spec trades. And we just continue to put trades on, and we're following our plan pretty well, and we're diversifying across the spectrum. So we've got some really good training going on tonight in our small group training in the service. Tonight we're going to focus on some pretty unique things, but overall we are going to be focusing on mainly portfolio management by the Greeks, of which I've been showing you guys that pretty much nightly. I'm watching my delta, I'm watching my theta. Those are my two core Greeks that I'm focusing on. And then I have my buying power usage, which is the next piece. We're going to focus on efficient buying power management. So we're going to focus on that tonight with the group, going over our personal trade plan rules. We're going to cover margin requirements. We're going to really dive into Reg T versus portfolio margin versus span margin and why. And one of the cool things about span margin too is based on how your trades are allocated across different types of assets and asset classes, span margin might feel that you're not really heavily risked. So you might put on some new trades, which I'm seeing right now, that are being put on for extremely low buying power or almost no buying power because I've already got the risk mitigated based upon some hedges or the way the portfolio is constructed. So I'm almost able to put on some trades for almost no buying power right now in certain asset classes because I'm allocated really, really well across those. We're going to spend some time tonight on notional risk as well. So we'll talk about notional. Not a big proponent of notional and where you should be. I know Tasty Trade has some maybe some loose guidelines on where they feel you should be notional. Maybe it's 4 or 5x on your notional. To me, it's good to know, to have a sense of it, but it's not something that I'm going to fear because I'm not owning the underlying. I'm not going to put myself in a notional bind. I've got stop losses, I've got hedges, and I maintain my buying power. So really the notional value of what I'm trading isn't quite as important. It doesn't mean you shouldn't know what it is, and we'll certainly cover that with members tonight, because I think when you know the sheer amount of leverage that you have and the sheer amount of notional you're controlling, it's something to pay attention to loosely, but it shouldn't be guiding your principles here as long as your buying power usage is under control and you've got hedges in place in case you start to move down significantly. So that's where we are on some of the training tonight. If you ever want to join those, you can certainly join up in the Discord and then join the small group training sessions. Really, really good stuff today. I love talking about the Greeks. Delta, we'll talk about portfolio delta hedging as well here. And this is why we focus on this every single day. It doesn't drive our trading. Neither does theta drive our trading, but we want to keep in our ranges because if we keep all three of these core elements, the key three, okay, delta, theta, buying power, if you keep those in line, you're really setting yourself up pretty well. Yeah, you can hedge, you can do whatever you want there, but if you maintain those within acceptable limits, you should find yourself pretty profitable overall. Let's take a quick look as well at the overall portfolio, and wanted to just jump into the portfolio. You can see today had a good day overall. We're up again 42,000 for the year here in this particular account, which is in good shape. We just rolled over at 5:15 anyway to the next day, so we're already up for the next day, $226. But everything pretty much green. If you're looking down the line here, everything was green for the day with the exception of bonds, which is okay because that's what we planned for. And bonds was one of our larger gainers for the day. We're doing fantastic in a couple of these trades. Look at these. Look at the gains on copper here. Super gains there. Nice gains on oil. Decent gains in the ES. Some decent gains in gold and copper bonds, and those are all in good shape and where we are. But what I want to bring your attention to is if you look at the capital required column here. So we're taking a look at this capital required column. You can see where things are lining up in ES 76. In fact, the best thing to do, in my opinion here, is let's actually open the allocation table, and I'm going to reshare the allocation table so you can see how we are currently allocated. Okay. So the allocation table here gives you a sense of how we're allocated. you can see that our S&P futures positions are taking up 24% of our account. Our oil positions, futures, are taking up 18% of our account. Bonds taking up 16% of the account. Gold at 12. Bill, our treasury funds here, so our T-bill ETF, that's at 16%, which is the fourth largest position. Then we've got almost 10% in copper, 9% in copper, and 5% in NASDAQ. So we are not super heavy, overweighted in any one. I mean, yes, even though we've allocated 60% of our buying power to this, when you start to add in the trade adjustments and some of the hedges and such that we're doing, we've really managed to knock that down. So one of the questions was, well, Tom, how come if you're allocating 60% of your available buying power to the long-term 112s and 112 trades, how come this is only at 24%? Well, the reason for that simply is that you're looking at lots of adjusted trades. So when do we take off the put debit spread? When do we take off the naked puts? Do we adjust some of those trades? Do we add hedges on there? I'm not a black swan hedge guy, but we do have hedges on that work in this portfolio, and it does keep our account running along pretty smoothly. Obviously, with a negative 30 delta, you've got to have some hedges on in order to put yourself down below zero on delta, considering that the 112 is typically a positive trade, strangles are a neutral trade. So you would think we would carry a little long delta, but we really don't have any right now, considering where the market is. All right, so SPY jumped up 88 cents today, up 0.17% on SPY, almost nothing there. IWM, a little bit larger at 1.4% here. The VIX down to 13%. We can take a look at some of these even on the charts. I don't know why Tasty pulls that thing up all the time, but if you're taking a look at some of these with the VIX or something else, you can get a sense of what that looks like. In here, as VIX just continues to fall and fall with some velocity as well. On ES here, let's see where we are up here. We pulled back a bit today, so I'm going to do this just instead of going to our toss charts. We'll just stick through some charts in Tasty. I don't have a lot of indicators running here. Down here we're just looking at RSI, and then we're also just looking here at the MACD. That's all we've got running, and then up here, just your basics on a couple of these indicators. In fact, we've got Bollinger Bands on, which I really don't think I need. I like my 3 ATR Keltner channels. We've got a couple EMAs. So right now we've got a 13 EMA and a 5 EMA, a 21. So I don't know why I have a 13 EMA in here. And I'm not sure why I have the 5 EMA in here. So that'll help clean things up a bit for everybody. So it looks a little cleaner now. Now I just have the 21 and the 50 EMAs on here, and you can see a little bit of volume profiling over here on it. So anyway, ES, a little bit of a pop today, up fractionally on the session. I don't think we're going to continue to be sideways. We're either going to make the run higher or run lower, but I would like to see more of a pullback to the 21 and see if we get long from there. If we take a look at the NASDAQ here, look at NASDAQ futures, up decently on the day, up 0.2%, up 35 points on NQ, which is great for us. And if we take a look at the big gainer on the day, really is your Russell. Look at the move that we've made on Russell. This is really much of a ascending as much as anything. Just crank the price level here. But if you look at this, let's go to the tool, see if we can move these up. But Taking a look at this level here, that price level that we have, you've got this price level, over here, and then you've got this uptrend. So you've got an ascending triangle. We could make that break and make a run for it. You've got the RSI down here that's moving higher, MACD moving higher. So we've got good momentum on the NASDAQ moving to on RTY, which is the Russell moving its way higher, at least on the daily here. Weekly still in good shape. All right, taking a look at oil today. So oil was up. Again, same type of a thing. You've got a resistance level here. In fact, I wouldn't mind drawing that on here. We'll drop a price level right on this. Okay, so there's our price level. Okay, let's click on that. So you got this resistance level here. You're tapping right on it again. I think it's going to be something to watch. Can we break through this particular resistance level here? And this is another ascending wedge type of scenario. Okay. So drawing the, however you want to draw these, we can draw it to here. In fact, let's just remove that line altogether. We'll add a trend line in here, and we can just move it sideways. Okay. So if you look at these two trend lines on here, we're moving higher, ascending triangle. We break here, and oil could be a bit off to the races. I've been bullish oil all along. We're really prepared for that. Don't need anything that's a massive run, but certainly a run higher on oil. If we take a look at gold, gold just continues to be in this beautiful sideways move here. So I love where we are on gold as a whole. Overall, this is in a downtrend. We can draw it from here all the way over. Okay, so you've got a downtrend on gold that's running, but you also have a little more of this recent uptrend on gold. So the nice triangle that's forming here on gold, this is starting to pinch in. We'll see how this all plays out when it comes right down to it. I'll also see how everything plays out on gold, but it's getting ready to break one way or the other. And if you're looking down here, you've got RSI moving higher, and then you've got MACD also moving higher. So both of these are pretty positive indicators, and we're breaking above the 50 level if we look at the RSI here. So we're today at 53.5. So we're really just breaking through the middle. In fact, can we put a price level on MACD? And what I would like this to be at. Okay, at 50. Okay. Yeah, so it set itself up exactly where we wanted it. At 50. All right, so we got the 50 line in down here now. So we've got the 50 line. So you can see us just bouncing through this and moving through the 50 line overall down here. So I like the way this is shaping up. Can we label next? Oh, I don't have the label. I want the label on. So let's see if we can get the label on. I mean, who knows? All right, we'll get it figured out. But we're up above the 50. So that's in good shape there. So I like where we are on gold. It's getting ready to move one way or the other. You're pretty much right at the point of control here as well in the volume area. So you're really just well set up. I just love where we are on gold. If we're taking a look at copper here as well, taking a look at copper, MACD giving up a little bit, RSI giving up a little bit. Let's do a price level down here. We can get this thing to the 50. All right, so we got the 50 running down here. You can see that we've moved up, came down, bouncing off of it. But really, the RSI momentum's been down until today. We got a little bit of a bounce in copper, which is exactly what we were hoping for, was that little bounce in copper. So we put a trade on in copper, hoping, and hoping is not a trading strategy, but you can see how this volume is starting to increase here. We were expecting to come down, tap on this thing, and then hold in here. I think it's in a good position right now. MACD and RSI lower, bouncing off to 21 with a bullish PSR. Very mixed. I think that sets us up really nicely for a strangle or other types of trades in copper. And then our friend, the bond, looking at how bonds are set up here, looks pretty nice as well. Let me move this up fractionally. Don't love the charting on toss, but we're going to use it for tonight. So we've on bonds here, we came down. You can see that we failed roughly through the 50 down here as well. I don't know why I can't put it on the screen correctly. But we'll put the label on. In fact, let's change the color on this to a purple as well. Right. So you can see we came up to the 50, failed at it, but we've been moving slowly higher on RSI. MACD is moving higher, and we're just sitting right in the middle here on this. Nothing, nothing extraordinary for us in here, except we continue to sail down, and that's been a good trade for us here. I don't think we're going down to zero, so you can see that we are downtrending, and we've been in this, really this channel. I think it's almost the exact same. Can't duplicate. Okay, I was going to try to do a duplicate. It doesn't. We don't have a whole lot of. Let's see if I can grab one of these. Maybe, maybe not. There we go. Just want to move one down here. All right, so we're going to create this this channel piece here on bonds. So we've been in a decent channel, okay? Down to the bottom of the channel, up to the top, down to the bottom of the channel, and now just hanging down here. We'll see if we continue in this channel. We'll watch for any break, but we do have a bullish PSR reversal signal here, even though things are down, but you've got the 9 above the 21. So things aren't super dire for bonds, but we'll keep an eye on how bonds react. And then the Aussie dollar, we talked about this yesterday. We're really just sitting nicely in here. MACD sideways, RSI pretty much just sideways. And then this thing's just been in a good sideways range for a couple weeks now. So we did get a trade on the Aussie dollar. If we take a quick look at that, we don't have any in this account, but we did get it on in one of our other accounts. So we've got that Aussie dollar, but we're in good shape. Like what copper did today. I mean, we've got a 112 trade, certainly benefiting from this move up in copper. This thing's up $1,000 today alone. So a pretty healthy move in copper. And then we also are sitting on a strangle that's at 37% in 7 days. To me, it's time to take that thing off. If we're making 37% in 7 days. So we'll wait and see what happens in the aftermarket tonight, but most likely I'm going to close that copper strangle 50% in 30 days, or 37% in 7 days. Just take it off and we'll put something else on. So let's we'll just keep doing that as we go. And then these gold covered strangle that we're sitting in here, this thing's up to 90% winner in 26 days, 6 days left in this trade. This will be a great trade for us. We could start to close this out anytime. My goal was to just let this thing expire. I don't know that I will, but we'll watch it. If gold continues to move higher, okay, which we saw here, is that gold's in this triangle. with MACD and RSI rising. So if gold breaks this downtrend and breaks out of this triangle, then I think we get a higher move on gold, which makes this coverage triangle another nice winner. So good day overall on pretty much everything we have. We're up in good shape. The only things that are nothing's down at all. And we've got plenty of hedges running in here, which is most of these losses are hedges and leftover put debit spreads from 112 trades. Well diversified. We've already covered that here, and really situated perfectly for us. You can see our BP is in really, really good shape. Sitting at 62% with our bill down here of $173,000 worth of bill, but only using 43,000 here. So again, this 43,000 is roughly 10% of the account. So we're sitting at 52.4 as I showed earlier. Plenty of bill. I'm excited for the dividend to be, or the distribution, whatever you want to call it, in a couple days from now. I think we'll be in good shape. All right, so there's really where we are on the account. We ran through some of the trades here using Tasty today instead of bouncing through toss. I get a chance to at least see what the portfolio is doing. We're up nicely at the end of the day. We'll see what happens in the after hours trading when we open back up at 6 o'clock tonight. But otherwise, we're in good shape. Love where we are. I think it totally makes sense. One of the things we talked about too with members today, I'll leave this with you, is making sure that you're also putting enough money where it needs to be. We're going to spend more time on this. I've got an ebook coming out on saving and investing, but the core for me is, number one, you've got to spend less than you make. And you should be spending, in my opinion, less than 70% of your take home on anything that you have going. Okay? If you can get that down to 60%, I think that's even better. But for sure, you should be spending to live, housing, cars, insurance, groceries, fund money, everything that you do should be less than 70% of your income. So you want to make sure you're spending less than you're making. It's an absolute critical key by, at least to me, 70%. The next thing is that you get rid of any debt that you have. No debt really is good debt. Oh, but my house, Tom, it's a great asset and that's good debt, isn't it? No, it's not good debt. Okay, no debt is good debt, but it's low interest and so forth. It's not, because you could be making more money with that money in the stock market. So don't go crazy on debt and get rid of your debt. The sooner you can get rid of your debt and your debt payments, the more money you can plow into your savings accounts. And then the last thing here is you want to be taking that 30% of after tax, your take home pay. You got 70% you're putting aside for whatever expenses that you have, fund money or whatever, if you need to. But the other thing is that 30% of your take home should really be going into saving and investing. The first thing you do is you fill up bucket number one. Bucket number one is your savings account. Make sure you have 6 months worth of salary in there, 6 months worth of take home pay set aside in bucket one. Once that's full, you don't have to do anything more with that bucket. That bucket's full. You leave that aside until you get a pay raise. Okay, so bucket number one, once that gets full, it's overflowing now into bucket number two. Bucket number two is your investments. And I mentioned it in last night's video. Only be putting in what your employer is going to match into your 401k if you know what you're doing. So let me put that caveat. If you know how to trade and you know how to generate good income, then only put enough to get the employer match into your 401k. Hopefully it's a Roth 401k that you have. If you have no clue what you're doing and you lose money trading and you can't make any money and you can't outperform the market, then you stick it all into VOO and some bond funds, or really just put it in a target date fund and in your 401k and let it go. If you don't have any clue what you're doing, just jam your money in there so you don't blow it. Okay. If you have a sense of what you're doing, put only enough in to match your employer's contribution. The rest that you have, okay, we have 30%, hopefully, that we're investing somewhere. Savings is full. Okay. I'm contributing to my 401k, just enough to get the match. Now I want to put the maximum I can into my Roth IRAs. So again, depending on your tax brackets and how your taxes work and so forth, I want to jam up to 7%, 7K into my Roth IRAs. Depending on your age, you can go to 8. You can use the back door as well if you're older. So there's a couple of different ways to do it, but I want to jam as much into that Roth IRA up to my 7K as I can. And then any amount left over, if you still haven't invested that full 30% yet, then you should be putting that into your trading account and just keep plowing money into that. If you can get your savings rate from 30% to 40%, I think you're going to be even in better shape. And one of the things we looked at today was we were working with building some trading plans with the members in our small group training. And what we were doing in those training plans was trying to get a sense of where do you want to be? What's your goal? Is it growth? Is it income? What's your goal going to be in your trading account that you have, or any your overall accounts? Could be IRAs, trading accounts, kids accounts, whatever you're doing. And if you just invest $1,500 a month, okay, $1,500 a month into an account, and you can generate 20% a year, which is not even 2% a month, okay, which I think we can do, understanding what we're doing. We've been doing it every year, okay, and we've been hitting 30, 40, 60, 80%, okay, but if you just make 20% a year and you're putting $1,500 in that account, in 13 years, okay, you're going to have over $1.1 million, okay, in 10 years or 13 years. Okay? If you're starting with a little bit of a nest egg to begin with, $20,000, $30,000 or something, or 10,000, great. Okay, $1,500. Okay, $1,500 is 18 grand a year. Okay, 18 grand a year. Let's take 18 grand. Okay, divided by 30%. Okay, is a $60,000 salary. So if you got a $60,000 salary, hopefully you can put $1,500 a month aside into your, get that savings bucket filled, contribute to your employer's matching 401ks, and then jam the rest in your Roth or trading accounts. And those you can control, which is why we don't put our money into our 401ks, is because you can only do what the markets allow you to do. And most people aren't savvy enough to outdo the markets, and they're listening to some financial advisor with their mutual funds and whatever they may have. It's not going to help you. I mean, it's not going to get you to the goal that you want to get to at 8% a year matching the market, or 10% a year matching the market. If you want to get to that, that financial freedom before you're 90 years old, okay, you got to start sticking money aside. If you do it early enough, man, in 10 years, you can have $1 million at $1,500 a month. Okay, got to live frugally. Got to be smart. Get rid of your debt. Pay everything down. Have your plan in place. Okay, and you can start putting these together. So hopefully this made sense. If you like this video, go ahead, click the like button down below. Feel free to drop comments if you want to. I can't get to all of them, but I'll try to look at the comments as they may. If you're not a subscriber, get subscribed. Start working on your financial plan. Start working on your trading plan. Come and join us so we can help you with how to build a plan, how to hedge, how to understand risk management, how to understand the different margins that you have, how to understand how to put gold together, how to understand what strategies to use, what configurations, how to track your trades, how to manage your plan, how to adjust your strategies as you go. Okay? We want to help put all of that together for you so that you can build financial freedom for yourself, and you're not having to work that hard, and we're not day trading, and we're not scalping, and we're not doing all these other crazy things out there. I'm sitting back, I don't even have to turn on the computer today. Okay, I don't want you to work that hard. Okay, I want you to make money without exhausting yourself and being a slave to being in front of a computer. Let's get that done for you. All right, we'll see you guys later. Enjoy the rest of your day, and we'll see you tomorrow. Bye-bye.